Okay, good afternoon everyone. We'll hold for a minute for online students to join. Okay, online whoever has joined can just put in the chat box. Hi. Okay, so yesterday we saw what all? Quick revise. Yes, we saw how to record journal entry, correct? Recording of journal entries. So can we just quickly classify assets? Sorry, yeah. Yes. What is this? Increase, debit, decrease, here, increase. Sorry, my mistake. I was just checking. Attentive enough? Yeah. Okay. So this is your journal entries, correct? Then we saw how to record a ledger. After recording the journal entry, how to post it to ledger. Debit, credit, particulars, amount, particulars, amount. Yes. So whichever account gets debited, we'll write on the debit side. Whichever accounts get credited, we'll write on the credit side. Correct? We quickly went through this. Today we'll practice the journal entries based upon some practical questions. Now, please see question number 1. Past journal entries for the following transactions. Started business with 10 lakhs, out of which 1 lakh was borrowed from ICICI as a loan. Yes. So first thing is, when we start business of 10 lakh rupees, it means we are bringing in the capital. Correct or no? We are introducing the capital. Economic benefit inflow, but not, I mean, that second part, excluding, this comes under excluding. Economic benefit inflow is there, but this is by the way of contribution by the owner. So this will not come as income. So this will come as capital. Yes, capital definition is simple, contribution or distribution by the owner. Correct? So this is contribution by the owner. So how is he contributing? 10 lakh rupees he is contributing. By what way? In 10 lakhs, he is telling 1 lakh is borrowed from ICICI Bank. Rest is directly bought by the owner. So ultimately owner is bringing in 9 lakh. 1 lakh is coming from the loan. Correct? So let's assume that entire money is we are getting it in the bank account. 10 lakhs we are getting it from bank account. So what is the entry apart? First thing, what are the, actually in fact here there are 3 legs of transaction, but we will break it. First one is 10 lakh getting introduced, one leg of transaction. Second leg of transaction, 10 lakh coming into our bank account, correct? But there is one more aspect. What is that? We are taking loan of 1 lakh, correct? Now, coming to first leg of transaction, capital being introduced, correct or no? So, capital balance will go up or come down. When we introduce the money to the business, our capital balance in the business will go up, correct? So, capital will come which side, appa? On the right side. So, it will be credit, increase in the capital. So, we can write as 2, correct? 2 capital. Next, what will happen? We have also received money of 10 lakh. Where we have received? Bank account. Yes or no? When we receive money in our bank account, whether bank balance will go up or come down? Will go up. So, bank is an asset. What is the asset rule? Increase in debit, decrease credit. So, increasing or decreasing? So, it will be debited. Correct or no? So, that will be 10 lakh. Capital being contributed directly is 9 lakh. Remaining 1 lakh is coming from where? Loan. Loan is a liability, na? Asset, income, expense, liability. Correct or no? Why liability, sir? It is an obligation. When you take the loan, you have to repay the loan. So, it is an obligation arising from past event. What was the past event? Accepting the loan was the past event. On settlement of which future economic benefit outflow is expected. Correct or no? When you try to close that loan, you will end up paying in cash. So, on settlement of which future economic benefit outflow is expected. Correct or no? So, 2, because loan is a liability, it increases, it will be credited. Correct? Am I clear? Everybody? Yes? Next, purchased machinery for 4 lakh on credit and furniture purchased for 1.5 lakh on cash. Okay, let's first take this only, then we'll take this. They have continued it here, but let's forget this. Let's first record this second entry. Clear? So, purchased machinery for 4 lakh on credit. So, what are the 2 legs of the transaction? One, purchase of machinery. Second leg, payable. Correct or no? We are not paying from the bank. So, it will be payable. Right? Am I right? Yes. Okay. Now, when you purchase the machinery, is it income, expense, asset, liability? Expense, will it fit the definition? But is it capital expenditure, revenue expenditure? Expense means what? Economic benefit outflow, excluding the other part. But look at the machinery. Will it even fit the asset definition? It is a resource controlled by the entity from which future economic benefit inflow is expected. Will it fit the definition? Yes or no? Sir, machinery we will buy, we will use it in our business for next few years. By using it in the business, we will manufacture some products. Correct or no? It is a resource controlled by the entity from which future economic benefit inflow is expected. So, that means in future we will earn. That is in 3 years we will earn money from it. So, it is fulfilling the definition of asset. Of course, it will fulfill a definition of expense also, but it is a capital expenditure. Correct or no? In expenditure, we saw 2 types. One is capital, one is revenue. What is the difference between capital expenditure and revenue expenditure? Capital expenditure will not occur on a regular basis. That is non-recurring. Revenue expenditure happens regularly. That is recurring. Clear? Usually, capital expenditure is something where when we buy that, we will use it for more than 1 year. But when it comes to revenue expenditure, the benefit of that expenditure will not be for more than 1 year. Revenue expenditure, the benefit will be only for 1 year. Capital expenditure, the benefit will be for more than 1 year. Clear? Yes. So, when it fits the definition of capital expenditure, it will become our asset. Understanding everybody? Yes. Am I clear? Okay. Now, asset is increasing, asset is decreasing, increasing. When asset increases, what will happen? Debit. Correct? So, what is the entry? Yes, what is the entry? Machinery na purchases. I already told you in yesterday's class only. If it comes under expenses, it will go to purchases. Usually purchases ಅಲ್ಲಿ ಏನ್ ಬರುತ್ತೆ? The goods which we purchase and sell, that will come under purchases. Clear? Now, is the machinery we are purchasing and going to sell it? No, we are going to use it for future. That is why I told you it is an expenses, but it will come under capital expenditure. So when it comes under capital expenditure, it usually fits the definition of asset. When it fits the definition of asset, which will be debited? Asset itself. So machinery account debit. Payment is made? No. Payable is there. So liability is there? Obligated to pay. So it is fulfilling the definition of liability. Correct or no? There is an obligation to pay. So when liability increases, it will be credited. Correct or no? To who is the IPA? Not given. Let's take to XYZ, or we can take it as to creditor, or we can even take it as to trade. Okay. In exam, party is not given. You can use this. Clear? What is the amount? 4 lakhs. 4 lakhs. Clear? Yes. Next, what is the next question? Furniture purchased for 1,50,000 on cash. Now 2 lakhs. Purchase of furniture, going cash is going out. Correct? Now furniture. Let's see. Whether will it fit the definition of expenses? Yes. Economic benefit outflow. Why? When you purchase the furniture, cash is going out. Correct? Yes, sir. Now, will it fit the capital or revenue expenditure? Is it recurring, non-recurring? Non-recurring. Correct? Okay, non-recurring. Will it fit the definition of assets? Asset is a resource controlled by the entity from which future economic benefit inflow is there. So furniture I can purchase and I can use it for more than 1 year and I can generate benefit out of it. How I can generate benefit, sir? Client will come and sit on that particular furniture. Correct or no? Or customers will come and sit in that furniture. Or I can use that furniture to keep my table and bill. Correct or no? Yes? Yeah. So what is the entry? Furniture is going up or coming down? So what will be the entry? Purchase or furniture? Furniture. Good. Furniture account debit. 2. How it is being paid? Cash. So cash balance will come down or go up? Correct or no? So when asset comes down, it will be credited. Correct, appa? You don't have to write credit here. If you just write 2 cash, it is more than enough. So what is the amount? 1.5 lakh, 1.5 lakh. Am I clear? Yes. 4th one. Deposited cash in Vijaya Bank current account. Okay. Now 2 transactions. One, cash is being paid. Second, bank is receiving the cash. Correct? Both namde. Cash is also namde. Bank is also mine. But one asset will go up, one asset will come down. Both are assets. Bank is also asset, cash is also asset. So what is the journal entry? Which is going up? Bank is going up. So that will be debited. Which is coming down? Cash is coming down. That will be how much? 2.5 lakhs. Clear, everyone? Yes. Next. Cash sales of 8 lakh rupees. Now. Correct? So 2 legs of the transaction. One, sales. Other, receiving the cash. Correct? So cash is an asset. Asset is going up or coming down. Our cash will increase. Correct or no? I had 1 rupee. Now I am getting 8 rupees. So cash will go up. Cash is an asset. When asset increases, it will be debited. Correct or no? So cash account debit. Now, what is sales? Income, expenses, asset, liability. Economic benefit inflow. Correct or no? There is an economic benefit inflow other than by way of contribution from the owners. Is sales contributed by the owners? No. Sales is contributed by whom? Customers. So economic benefit inflow is there? Yes. So it is an income. Sir, can it fit the definition of expenses? No. What is expense definition? Economic benefit outflow. Is there outflow? Sir, will it fit the definition of asset? Resource controlled by the entity from which future economic benefit inflow is there? No. We are getting economic benefit now only. Liability, is it an obligation? No. So it will fit the definition of income. Clear? So when income increases, it will be credited. Correct or no? Liability, income, capital. 2. Correct? Yeah. One student is asking, sir, instead of writing bank debit, can we use Vijaya Bank current account? Yes, you can use. Now, next is credit sales of 4,50,288. Now, what is credit sales? Where I do sales, but I will receive money after some time. Yes. So, it is as good as, say, for example, all of us have some shops like that in our life, where I will take something, I'll say, I'll give it later. Huh? Book Correct or no? Yes, everybody has some shops like that. Or boys famous, ಬೆಳಗ್ಗೆಯಿಂದ ಸಂಜೆ ಮಟ್ಟ ಆಗಿರೋ ಲೆಕ್ಕ ಒಂದ್ಸತಿ. Correct or no? So what is that? Only boys will come to know. Huh? Yes. Chai sutta bar. Correct or no? That is how it is. So whatever has happened for the entire day, I will pay it in one shot, because every time I can't come and pay 18 rupees, 18 rupees, 18 rupees. Correct or no? Yeah. So now that is credit. So that means I am selling the goods now itself. Sales is happening now itself. But the thing is, the payment which I am going to receive will be after some time. That means money will be received after some days or some time, whatever it is. But sales is there. Yes. Whether sales fit the definition of income? Yes. So whether income is going up? Yes. 2. Sales. How much? 4. Where is it? 4.5288. Okay. Yes. Clear? Now, sir, debit A, no. We are not receiving cash. We are not receiving any bank. Then what will happen, sir? We have receivable. The receivables, our customers from whom we have to receive money, are called as debtors, or they are even called as trade receivables. So here you can debit debtors or trade clear. So it will be 4.50288. Am I clear? Everybody is understanding? Yes. Okay. Cash purchase of 3,65,000. What is the entry? Purchase is an expense, economic benefit, outflow. When will we purchase? What we purchase? We purchase our trading goods. So purchase is an expense. So expense goes up, it will be debited. So purchase account debit. Correct? Yes or no? Next, how we have purchased? By cash. When we purchase by cash, cash is going out of our business. So our cash balance will come down or go up? Come down. Cash is a asset. When balance comes down, it will be credit. Clear? 2. Cash. 3.5 lakhs, 3.65. Sorry. Clear? Yes. Okay. Next, credit purchase of 2,88,952. Now here, what is the meaning of this? Here also I am making purchases. Only thing is, I am not paying immediately. I will pay after some time. So here, when we don't pay immediately and when we pay after some time, that means what? We owe money to our suppliers or to our vendors. When we owe money to our suppliers or vendors, those suppliers or vendors are called as creditors. What? Creditors or trade payable. Clear? Creditors or trade payable. So what is the entry? Purchase anyhow is an expenses. Correct or no? 2. Instead of cash, we will write creditor or trade payables. Who are trade payable or creditor? It is a liability. When liability goes up, it will be credited. What is the amount? 2,88,952. Yes. Next, cash received from debtors 152,369 after allowing discount. Okay. Now coming to discount, let's just quickly understand what are different types of discount. Discount, there are two types. One is cash discount, one is trade discount. Sir, what is this meaning of cash discount and trade discount? I will tell you. Whenever you walk into Vishal Mart, D Mart, West Side, Zudio, there will be sale running on, correct or no? Sale 199 rupees, everything on the floor is 199. Correct. What is the meaning of that? That means whatever might be the price, you can just pay 199 and pick the item. So that means what? They are selling it at a less price than what actually the marketed MRP is there. Correct? What is the actual price printed on that? Now, what is the difference you are getting? It is a discount. Correct or no? Discount sales. Now, when you go to any of these outlets and buy, when there is a discount running on, such type of discounts are called as trade discount. That means when you buy the product, then and there itself you will get the discount. On the bill itself it will be mentioned discount. Correct? So such types of discounts are called as trade discount. That means trade discount is nothing but the discount which is issued at the time of the sale or purchase itself. Understanding? Discount which is given or which is received at the time of sale or at the time of purchase. At that moment only the discount is given. That is called as trade discount. Now, what is cash discount, sir? Cash discount is simple, sir. Say for example, I sold goods to my customer, say ABC. ABC Limited. I have sold goods worth 10 lakh rupees to ABC Limited. Now, ABC Limited says I will give after 3 months. Okay, fine. But what happened? After 2 months, I am in need of money. I need 10 lakhs immediately. But ABC is telling I will give after 1 more month. He said 3 months, right? But 2 months admele, I need money. Correct? I need immediately money. So what should I do? Now what I will do is I will go to ABC Limited. I will say, do one thing. You pay me 9.5 lakh today. Your 10 lakh is considered as paid. So how much was receivable from him? 10 lakh. But how much you are getting settled for? 9.5 lakh. What happens to the remaining 50,000? That is also discount, but that is cash discount. Sir, then what is the exact difference here? Understand. Trade discount was done at the time of sales or purchases. Cash discount is done when already sale and purchase is already done. But that particular cash discount is given only for faster collection of the money or faster payment of the money. Understanding? Cash discount is an incentive given to collect the debtors fastly. It is an incentive given. Clear? So that is why the cash discount part will never get reduced from the purchase value. It directly gets reduced from the debtor value, whereas trade discount will get reduced from your purchase value. Am I clear? Everybody is understanding the difference between cash discount and trade discount. Now, whatever discount it is, when you are allowing discount to somebody, it is an expenditure, correct or no? Why? Simple, sir. If you would have sold without sale price, that means, say for example, if sale price were 499, but you are selling it for 199, that means are you not losing the money? Correct or no? Economic benefit outflow. I would have received 499, but I am receiving only 199. Did I not give economic benefit to the customer? So economic benefit outflow is there. So it is a expenditure. So whenever you give discount to your customers, it is an expenditure. Whenever a supplier gives discount to us, who is benefiting? Me. Economic benefit inflow. So it becomes our income. So whatever discount is given on purchases, it will become our income. Whatever discount is allowed on the sales, it becomes our expenses. Similarly, whatever discount is given while we are making the payment to the creditors is a discount income. Whatever discount we are allowing to our customers while receiving the payment from them is discount expenses. Say for example, just now I told you ABC Limited, I have to collect 10 lakh rupees from him. But I said pay me 9.5 lakhs, you are done. So am I not allowing the discount to him? Am I not giving discount to him? So this will become my expenditure. Because you had to collect 10 lakh, but you are collecting only 9.5 lakh. The 50,000 you are foregoing. Correct? So it is your economic benefit outflow. So it is our expenses. Whereas when our supplier says, okay, do one thing, you have 5 lakh payable, pay me 4 lakh and done. Now what happening? Actually, I should have paid 5 lakhs, but how much I am paying? Only 4 lakh. 1 lakh I am receiving economic benefit. That is discount as a income. Clear? Is everybody clear about discount? No. Let's come back. Now what is the question? Cash received from the debtors is 1,52,369 and we are allowing a discount of 2,631. We are allowing the discount. That means what? We are giving the discount to our customers. When we give discount to our customers, it is an expenses. So what is the entry? First, are we collecting cash? Yes. Correct or no? We are collecting cash. Cash is an asset. So asset goes up or comes down? Goes up. When we collect cash from our customer, it will go up. Correct or no? So cash debit. How much we are collecting? 152,369. Correct? Yes. Correct? Now, are we giving any discount to them? Discount is an expenses. Is my expense going up or coming down? Going up. So when expense goes up, it will be debited. Correct or no? The name of the expense will be discount or discount allowed. Correct, discount allowed. So what is the amount of discount? 2,631. Correct? Now, earlier, debtors, we had to collect money from the debtors. Correct? So we had receivable from the debtors. So they were an asset to us. Correct or no? Asset, because debtor was a resource controlled by the entity from which future economic benefit inflow was about to happen. Now, future economic benefit inflow happened already. He paid the money. Correct or no? Now his balance will come down. When asset balance comes down, it will be credited. Correct or no? So to debtor. Now by how much his balance came down? Is it only how much he paid or is it whatever he paid plus discount? In simple example, I had to receive 10 lakh from ABC. He paid 9.5 lakh. Now his balance will come down by 9.5 lakh or it will come down by 10 lakh. It will come down by 10 lakh. Why? Because I gave him discount of 50,000. No. So his balance should come down by complete 10 lakh because I promised him if you pay 9.5 lakh, it will be considered as your 10 lakh is paid. Clear? So now here it is 152,369 plus 2,631. How much is it? 1,55,000. Am I clear? Everybody is understanding? Yeah? Any doubts? Now, one more rule I have to tell you. Always remember, whether your journal entry is correct or wrong, you will get to know the debit side and the credit side total should always match. It should be equal. It should be same. Clear? That is what is dual aspect of accounting. Correct or no? For every debit, there is a equal and opposite credit. Clear? Yes? Okay. Now, one more thing. This type of entries where one debit, one credit are called as simple journal entries. Clear? Where there are more than one debit or more than one credit, it is called as compound journal entries or combined journal entries or complex journal entries. Whatever you can call, you can call. Clear? Yes? Because we are, see, if you would have passed, we could have passed two journal entries. One cash debit to creditors, one more discount debit to creditors. Instead of doing two entries, we are combining and passing one single entry. That is why it is called as compound or combined. Clear everyone? Yes? Next. Cash paid to creditors 3,01,500 after getting discount of 1,000. So here, are we giving the discount or are we receiving the discount? We are receiving the discount. So it is an income. Correct or no? Now, creditors was an obligation. It was a liability. Now when we pay the creditors, whether my creditors balance will go up or come down? Come down. So when liability comes down, it will be debited. Correct or no? So correct. 3 lakh 1,500 or it will be more than that. It will be 3 lakh 2,500. Why, sir? Where did that extra 1,000 rupees come? Simple, sir. I had to pay him 3 lakh 2,500, but he has given 1,000 rupees discount. Correct? Correct, sir. But how much his balance should come down by? 3 lakh 2,500. 3 lakh 1,500 is what we pay, and 1,000 is the discount which we get. So total 3 lakh 2,500. Now we are receiving discount income. So we can say discount received, that will be how much? 1,000. Then we are paying it by cash. So our cash balance will also come down. So how much cash we are paying? Only 3 lakh 1,500. Clear? Again, matching. Everybody is understanding? Now, most important part which we have not discussed till now. After recording every journal entry, we need to explain that journal entry in the form of narration. Sir, where will that narration come? After every journal entry, below there you should put a bracket and write down being cash deposited to bank. Illi being cash sales made. Illi being credit sales made. Simple. Yes. So those are called as narration. See here. Being goods sold on cash. Being goods sold on credit. Clear? Is everyone understanding? Any doubts? No doubts? Now next, problem number 3. Problem number 3. Okay. Now problem number 3 is for you to quickly solve. I'll give you 5 minutes. Let's see how many students will be able to solve. What? Journal entries only, no? 5 minutes is enough. How many? 7 questions. Okay, 7 minutes. One question only. Yeah. I am a chartered accountant. I can skip narration, but you have to write the narration. Of course, while we do our accounting in our real life also, we do narration in tally. Waste alla, madam, it is needed. Now, I'll just explain you what is bad debts. Bad debts is nothing but when we have to collect money from our customers and customer goes to Dubai, absconding. Just like how Vijay Malla absconded to England by putting 3 namas to our SBI. Correct or no? So, when we had to collect the money from a customer, but that customer says, no, I am not paying you, then such collectible money becomes our bad debt. That means we can't collect the money. But what happens? Let me say, he went to Dubai, but after 1 year he earned good money. He said, no, I should have not cheated that particular vendor. So I will go back and give the money to him. Suddenly, Jnanodaya. Correct or no? Buddhan Odi, he got Jnanodaya. Now he says, I will repay the money, and he repaid the money. Now earlier when he absconded to Dubai, he became bad debt. Correct? Now when we recover the money from him, he will become bad debt recovered. That bad debt is actually an expenditure. How, sir? Sir, we have to receive the money. We didn't receive the money. That means economic benefit outflow, correct or no? So that is our expenditure. Now, sir, okay, but what happens after 2 years he got Jnanodaya, no, sir? He came back. That time what happens? Economic benefit inflow. Bad debts recovered. Happy. Correct or no? Income. Drawn a bill on 75,000 on Ramesh is nothing but that. Huh? Huh? It's not a partner. It is, see, let's say Ramesh is a creditor. Ramesh is a creditor. So, he's wrong bill. No, not that. I'll explain it to you. There is something called as bills of exchange. Understanding? So, I have to pay to Ramesh. If I have to pay to Ramesh, Ramesh will become my creditor. But what I will do is, instead of showing it as Ramesh, I need to pay, I will issue Ramesh one document called as bills of exchange. I will say, Ramesh, I accept that I need to pay the money, but I will pay after 1 month. Now what happened? From creditor, that Ramesh gets shifted to bills payable. I'll explain it to you again quickly. Listen to me carefully. When I need to pay money to somebody, that is my creditor. I need to pay money to the creditor. Now, two ways. I pay the money immediately or I pay money after some time. If I pay the money immediately, there is no concept of creditor at all. But now I am paying after some time. But my creditor comes to me and says, no, sir, I am urgent need of money. I am in urgent need of money. So, what will do? I said, I don't have money to pay. So, what I will do is, I will give you one document saying, I promise you to pay on so and so date, this much amount. Now, what is the use of that document, sir? Now, what is the use of document is, I don't have the money, he is in need of money. So, what he will do is, he will take that document and go to a bank. Now, bank, what they will do? They will say, okay, they will verify the document and they will say, okay, done. We will give you the money, but we will not give you full money. We will give you 97% only. 3% is our charges. Understanding? This is called as discounting of bills of exchange. What? Discounting of bills of exchange. Now, sir, what is the whole idea behind this, sir? What is the process? Why do we have to follow all this process? Nam kade ide eno gudda sutti mailarak enak hogbek, sir. Tell what is happening. What is happening is simple, sir. I don't have money. He don't have money. He is in need of money, but I don't have money to pay him. But I need to somehow, he need to arrange the money, correct or no? So what he gave me idea, I understand you are also not in a position to pay me money. Neither I have any extra money, but I need the money immediately. So let's do one thing. You give me a document saying you will pay after 1 month. I will take that document and go to the bank and say that, see boss, after 1 month, you collect this money from him. The bank will say, okay, fine, I'll collect the money from him. But today I will not give you full money. I will give you 97% of whatever he is going to pay. Why? Because 3% is bank's commission. Correct? You needed money urgently, no? Bank is giving you money urgently. So bank has to charge something from you. Correct or no? It was never bank's money. It was your money. So bank will charge a commission and say, I will give you. Now, this document which I issue to my supplier or vendor or my creditor is called as bills payable. Understanding? Bills payable. The money, now ulta, opposite side. I need money, he has to pay me. Neither he has money, neither I have money. So he will give a document to me saying, I will pay you after so and so month with so much amount. Now I will go to the banker and discount it. Now who is receiving the bills? I am receiving the bills. So it is bills receivable. So when it comes to debtors, it will be bills receivable. When it comes to creditors, it will be bills payable. We will issue bills payable to creditor. We will take bills receivable from our debtor. So in this case, we are drawing a bill of 75,000 on Ramesh means, what is the case? Who draws the bill? There are different parties in drawing the bill. There is a drawer, there is a drawee, there is an acceptor. Usually the drawer is the person who will prepare the bill saying, you owe me this much money, and the drawee will accept the bill. So here we are preparing the drawer. Drawer we are writing means, that means we have to collect money from Ramesh. Understanding? Yes. So Ramesh has to pay us the money. So now Ramesh doesn't have the money, but we are in need of money. So what I will do? I'll prepare one document and get him signed. Now bills receivable. Everybody is understanding or not? Yes. So what is the entry? From debtor we are shifting it to bills receivable. So one asset will come down, one asset will go up. Clear? Do it.
What if that person goes by?
Which person?
That person who gave you the.
There is again two types of transaction in that. One, bank will discount in no recourse anta kariteve ನಾವು. One with recourse. Now what is with recourse? What is no recourse? I'll tell you. With recourse andre bank will say, in with recourse the commission will be less. No recourse commission will be high. Now what is this meaning of recourse or no recourse, sir? Simple. If I say you discount this bill with recourse anta ನಾನು bank ಹತ್ರ ಹೇಳಿದ್ರೆ bank will do what, you know? They will wait till the date. Once the date comes, they will go to the party to collect the money. Party is in Dubai. Bank will straight away come back to me, pay the money. This is called as recourse. So they will come to me only to collect the money back. No recourse or non-recourse means left to bank. They will go to Dubai, beat him up there and get the money, or however they want to, they can do. Goods destroyed by fire. Goods is a good. First of all, goods destroyed by fire is an expense, income, asset, liability.
Expense.
Correct. Goods destroyed by fire is a expenses. So when is expense going up or coming down? Going up. Correct. So what is the entry will record?
Goods destroyed by fire.
Record.
So what about, sir?
Second, and one more thing. However, insurance company agreed to settle 8,500. Don't record this combined transaction. You will get confused. Record two separate entries. Seventh one, cash stolen by employee. Yeah. Cash theft account debit. Embezzlement account debit. Usually cash theft is called as cash embezzlement. Clear?
Personal furniture or business.
Now tell me, if you are bringing money into business, what is it called? Now if you are bringing furniture into business, what it is called?
We will like record furniture.
Now you tell me the journal entry. Are you not bringing the furniture into business? So your asset is going up or coming down? Done? Wait, we'll discuss. Sixth one, split into two. First part you split separately, second part you take again. Second part, even if you don't write, it is still fine. First part you have to write. Huh?
Goods destroyed by fire or debit.
You decide.
The bank or
How bank, sir? Are you paying anything from the bank? Are you paying anything to the bank? Then? Correct or not? Sir, first sum you solved easy one, sir. Now you are given difficult one, sir. This is cheating. Correct or no? Exam they will cheat like this only. Yeah. You think, sir, it is a little bit complicated transaction. You think about it. You lost goods worth 10,000. You received money worth 8,500. How much is actually your loss? That you see how you will. That you see how you want to account. Sir, earlier you said Sir, goods I lost is 10,000. So you transferred 10,000 rupees. Huh? Goods lost by fire. Now you are saying I am receiving out of 10,000 8,500. So how much is effective loss? 1,500. So how much should be good that account if you open goods lost by fire? How much should be the balance? Hey. Hey, ಅರ್ಥ ಆಗ್ತದಿಲ್ಲಪ್ಪ goods lost by fire account you opened saying that 10,000 I will transfer to that account, done. Now are you not receiving money towards that account only now? How much you are receiving? 8,500. So what happened to remaining? That will be your balance in okay. Should I now first bad debts recovered 1850, correct? Now as I told earlier, when bad debt actually happens, what is the entry? Bad debt debit to debtor. When bad debt happens, that means we had to collect money from this debtor. Now debtor is shifted to Dubai, correct? Expense will go up, asset will come down, correct or no? So that is when bad debt happens. This is the journal entry. Now what is happening here? Opposite of that. Earlier we transferred it as bad debt, sir. Now we are getting the money back, correct or no? So how much you are receiving? Say I am receiving what is the amount? 1850. Yeah. Let's say we are receiving money in cash. So our cash will go up. When asset goes up, it will be debited. So entry cash account debit. To sir, I am recovering the bad debt. That means earlier I have claimed it as an expense. Now I will claim it as a income. Why? Earlier expense is now getting reversed, correct or no? Earlier I thought I will never be able to collect. That is why I transferred it to expenditure. But now I have collected back. So I will reverse it by showing what? Expense opposite income. Correct or no, sir? Clear? Everybody? Yes? Or sometimes you can even write two bad debt again. What will then happen, sir? Your expense will come down. Ashte. Clear? If you write down two bad debt, we'll assume that your expenditure of bad debt is coming down. But in your exams, follow bad debt recovered account itself. Clear? Yes? Next entry. Drawn a bill of 75,000 on Ramesh. Now I explained you bills receivable, bills payable. Correct or no? So who is the drawer? The drawer is a person who has to receive the money. Here, who is drawing? I am drawing or Ramesh is drawing? Who is drawing? Read the question. Whether I am drawing or Ramesh is drawing? Me. Correct. So I told you the person who draws the bill is usually the person who has to receive the money. Correct or no? So here who is drawing? I am drawing. That means what? Ramesh is a debtor or creditor? Debtor. Correct or no, sir? I am drawing the bill. That means I have to receive the money. Receive money from whom? Ramesh. So Ramesh will automatically become my debtor. Correct or no? Only debtor we collect the money. Creditor, we pay the money. If he was a creditor, then he would be drawing bill on me. Now I am drawing bill on Ramesh. So when we draw the bill, what we do? We will reduce the Ramesh balance, will increase bills receivable balance. Ashte. So we'll increase bills receivable balance, will decrease 75,000 only, no? Clear? Narration. Being bill drawn on. Clear? You want me to repeat anything in this? Simple, sir. I am drawing the bill because he is receivable to me. If Ramesh should have drawn the bill on me, it means I have to pay him. So automatically it would have become bills payable. Ulta entry. Creditor account debit to bills payable account. Bills receivable is also asset, sir. Sir, simple, sir. Debtor in the balance, bills receivable move ಆಗ್ತಿದೆ ಅಷ್ಟೇ. So both should be asset only, no? So this asset is going up. This asset is coming down. Am I clear? Yes. Next. Goods purchased for trading person taken home for personal use 4,750. Now simple. When I put the money, it is called as capital contribution. When I take out the money, it is called as drawings. Correct or no? Distribution of the capital. Correct. Now, instead of putting the money, I put in my car. It is again capital contribution in the form of car. Sir, instead of drawing the money, I took some goods. Again, it is in the form of drawings. Drawings is nothing but taking out your money from the business as a owner. That second part. Excluding distribution of profits or by way of drawings. Clear? Yes? Now, when I draw the money, whether my capital balance will come down or go up? When I draw the money, whether my capital balance will come up or go down, it will come down. Correct? So, capital account, whenever it comes down, it will be debited or credited? Debited? So, capital account debit, or one more word we can use is drawings account. Clear? Eradu onde. You can use capital, you can use drawing. Even if you use capital, the examiner will not deduct your marks. Huh? No, sir. Ultimately, I'll ask you one question. When you put the money, you are crediting the capital account. But when you draw the money, why you are keeping it drawings? Correct, sir. Correct. But because you have introduced the money, that is why you are drawing the money. No? Ultimately, every year your drawings account get closed and the balance will be transferred to capital only. In our balance sheet, we will never carry the drawings account. We will always carry capital account. So whatever money you put in, whatever money you... Correct. Yes. So if you keep the drawings account open, who is going to pay that money? Nobody will pay. Owner will not pay. Listen to me carefully. The question is, sir, why we have to transfer it to capital account? Why it should be kept in? We can keep it in drawings only is the question. My question is simple. When you put the money, you credit to capital. Correct. Then when you draw the money from the business, why it should not go to capital? Treatment should be same. No, when you put the money also, it should go to the capital. When you draw the money also, it should go to the capital. One is that, my logic. Second logic. Okay, you created one more account, drawings, just to give the clarification as to how much I have drawn the money. Okay, fine. Now, what is the use of this drawing? Ultimately, this drawing accounts will get closed and transferred to capital account only. Sir, why it is done? Why can't we continue it as drawing? Why we have to continue it as drawing? Because do you think the owner will come and say, no, I withdraw 4,000 worth of goods, I will repay back the 4,000. No. He will not do that. He will put the money. How he will put the money? He will not put 4,000, something like that. He will put 10,000. Yeah. This is business, take 10,000. Understanding? 1 lakh rupees is needed in the business, he will put 1 lakh. He will never see how much is the drawings, that much only I will put in the business. No. He will put what is the requirement of the business. Ultimately, drawings and capital, both account belongs to whom? Owner. So maintain only one account. No. So that is why when you, of course, drawings is an account which can be created, but you need to close that account and transfer at the end of year to capital account. There is no balance carry forwarded. But you can just, in the narration, you just have to mention it very clearly, being drawings made and the same is debited to capital account. Anyhow, narration you have to write, no ma'am? Next, what he has done? He has taken goods. Correct or no? So, to purchase. Sir, why purchases, sir? Simple, sir. When we purchased the goods, it was an expenditure. Now, when the same goods are drawn by the owner, it should still be a business expenditure of a business, huh? No. Correct or no? Say I purchased 100 rupees worth of goods for business. Now 10 rupees is gone to the owner. Now what is the actual expenditure of the business? Only 90. Correct or no? Yes or no? So if I, earlier when I purchased, I made entry, purchase account debit 100 rupees. Now 10 rupees is taken by the owner. So my purchase should come down by 10. Correct or no? So what you will do? Reverse it. How do you reverse? Purchase is an expenses. When expense goes up, it will be debited. Now, expense is going up or coming down? It is coming down. So, it will be credited. It is also called as reversing the purchases. Am I clear? Yes. Next, cash paid for son's school fees 3550. Now, who is son? Is he related to the business? No. He is related to who? Owner. So, whatever money owner draws, it will go to drawings. What is the entry? Correct or no? He has drawn cash. Correct? Yes. So, what is the amount? ಕೆಳಗಡೆ ಬ್ರಾಕೆಟ್ ಅಲ್ಲಿ being son's school fees. Clear? Understanding? Next. Bought personal furniture amounting to 6,000 into business. I already explained you. If you bring cash to the business, what is the entry? Cash account debit to capital account. If you bring bank, what is the entry? Bank account debit to capital account. I am bringing furniture. What is the entry?
Furniture.
Capital. Ashte. So what is the entry? Furniture. Clear? Amount 6,000. Furniture is an asset. Asset will go up because he is bringing the furniture. Now our furniture, one chair became 3 chairs. Going up? Now capital, because he is contributing the money in the business, the capital will also go up. So it will be created. Next. Goods amounting to 10,000 destroyed by fire. However, insurance companies agreed to settle the claim for 8,500. Now, first let's record fire incident. Fire agidala adan bar. What is the entry? Goods lost by fire. Debit. Sir, what is this, sir? This big account? Yes, sir. It is the truth. The instance is loss of goods by fire. So I have to write it as it is. Sir, why it is debited, sir? It is an expenditure. Correct or no? The goods which I would have sold and made money, now I don't have that goods. So I am losing. Economic benefit outflow is there? Yes or no? So it is a expenditure. So when expenditure goes up, it will be debited. Again, to purchase account. Why, sir? I purchased 100 rupees worth of goods. Now my expenditure in purchase is 100. Now in that 10 rupees gone, burnt. Now what is remaining? 90 is remaining. So my purchase should look 90 only. No, it should not look 100. So I have to reverse that. Correct or no? Yes. So that will be reversal. 10,000. One more way, some people also account like goods or inventory, because your inventory balance should come down or your goods balance should come down. Some people in your solution, they have given trading account. Clear? So why it is given as trading account, sir? Because they are directly transferring this to the trading account. ಎಲ್ಲ ಒಂದೇ ಸರ್. ಸರ್ ಯಾವ್ದು ಬರೆದ್ರೆ ಕರೆಕ್ಟ್? ಯಾವ್ದು ಬರೆದ್ರು ಕರೆಕ್ಟ್. You can use purchase, you can use goods, you can use trading account. Everything is correct only. Clear? Trading account ಅಂದ್ರೆ ಏನು ಸರ್? P&L ಅಪ್ಪ. Trading P&L. Clear? So you can write 2 purchases, you are reducing the purchase balance. 2 goods, you are reducing the goods value. 2 trading account, you are what you are doing? Purchase ಹಂಗೆ ಇರುತ್ತೆ, goods ಹಂಗೆ ಇರುತ್ತೆ, ಬಟ್ ಇದು ಬಂದು ಕುತ್ಕೊಂಡು ಅಲ್ಲಿಗೆ set off ಮಾಡೋದು. Am I clear? It gets set off as it is. No difference. Am I clear? Yes. Okay. Next. Now insurance will come down to insurance. Tell me, what is the entry? What should be the entry? First of all, we are receiving money. How much we are receiving? Correct? 8,500. Let's record that first. Bank balance will go up or come down? Go up. Go up. 8,500. Correct? Now, what was the loss? The loss was goods lost by fire. Now, the loss was how much? 10,000. Correct or no? Yes. Now, is it also coming down now? Because earlier we estimated loss to be 10,000. Now we are estimating loss to be only 8,000. No, wait. Earlier the loss was estimated at 10,000, but now we received the money of 8,500. Correct? So what is the net loss? 1,500. Correct? Now earlier we debited how much? 10,000. Correct? Now we should reverse 8,500 in that 10,000. Correct or no? Because that much loss should not be there. How much is actually loss? Only 1,500. So you debited the 10,000, but how much should have been debited? Only 1,500. So what we will do? We will reverse to now if you open goods lost by fire, what will happen? Earlier to purchase account 10,000, illi by 8,500. Total should be 10 only, no? So the balancing figure 1,500 will be by trading P&L account. Clear? Understanding everyone? Didn't you understand? So what is the closing entry ultimately? The closing entry is trading account debit to goods lost by fire. So this balance is being transferred to trading account. Now in trading account what will happen? To goods lost by fire. Am I clear? Everybody is understanding? The balance, I already told you, the balance of expense and income will be transferred to P&L account. Trading account is also part of P&L account. Am I clear? Yes, so this balance is transferred to trading and P&L. Am I clear? Everybody? Yes? Next. Sir, cash stolen by employee. What is the entry? We can say cash embezzlement account debit to cash account. Correct or no? How much? How much? Clear? Everyone? That will come as a next entry, madam. You open cash embezzlement account. Cash embezzlement is what? Expense account or no? You lost the money. Economic benefit outflow. Cash embezzlement is an expense account. What is the entry? To cash. Correct or 1,200. Now you have to close this expense account. 1,200. 1,200. So what do you do? By clear? Now this is your P&L entry. The second entry. Now it will be P&L to cash embezzlement. First you have to record this entry. Then it will come as this entry. Okay. In your solution they have directly given second entry. Which one is correct, sir? Both are correct. Here we recorded two entries. There they recorded only one entry. In simple terms, our mathematics. Cash embezzlement. Cash embezzlement gets cancelled. Debit to credit. Correct or no? This is plus. This is minus. So it gets cancelled out. What will remain? To cash P&L. So it will be P&L account debit to cash account. So debit or credit is nothing but a plus or minus a past. That is why I told you accounting is interlinked with mathematics. Understanding? Any doubts in this? Now next, difference between capital expenditure and revenue expenditure. We have already discussed capital expenditure. What is the nature of the capital expenditure? Non-recurring in nature. What is the impact of revenue expenditure? Recurring in nature. Correct or no? Now, one more difference. Capital expenditure, the benefit is usually more than a year for long term. revenue expenditure will usually for a short term, less than a year. Clear? So capital expenditure is that expenditure which results in acquisition of an asset or which results in increase in earning capacity of the business. So that is why I told you whenever capital expenditure definition gets fulfilled, next go to test the definition of assets. Correct or no? Everybody remembers? Yeah. Next, revenue expenditure. Expenditure incurred in normal course of business and whose benefit expires within the year are known as revenue expenditure. Clear? Within the year means 12 months. The main purpose of the incurring capital expenditure is to improve the earning capacity of the business. In other words, asset definition. Future economic benefit inflow should be there. Clear? Here, the main purpose of incurring revenue expenditure is to maintain the earning capacity. Immediate economic benefit, inflow and outflow. Capital expenditure normally appears on the asset side of the balance sheet. Revenue expenditure will go to P&L account. I told you already this is discussed, correct or no? If it fulfills asset definition, it will go to asset account debit. If it is not fulfilling, then it will go to purchase account debit, correct or no? Yeah. It is non-recurring, it is recurring. Capital expenditure gives benefit for more than a year, it gives benefit within the expires in the financial year. Example is purchase of your fixed assets. Here, wages, salary, rent, whatever you want, bonus, commission. Clear? Everybody? Am I clear? Next, there is a concept called as deferred revenue expenditure. Deferred revenue expenditure and prepaid expenditure. Now, let's quickly give you an example to make you understand better. Now, you take insurance. Correct? Say, for example, you took the insurance in the month of January by paying 10,000 rupees. How much? 10,000 rupees. Now, insurance will come for how many months? 12 months. Usually, insurance will be for 1 year. Now, your books are getting closed when? Your books are getting closed when? March end. Correct? So, do you want to consider entire 10,000 as an expense for this year, or we should push certain expenditure to next year? Correct or no? Record the expenditure as and when it is incurred. Now here, whether entire 10,000 is incurred in the current year only? No. No, sir, we are incurred in the current year only. No, sir, we paid in the current year. Sir, I told you already, accrual method, payment is not considered. Whether the expenditure is actually incurred. Incurred in the sense, have we availed the services for entire 12 months in 2 months? No. So what do we do? In 10, say for example, if your insurance is 12,000, how many months are being used in the current year? 2 months. So 12,000 divided by 12 months. In the current year, it is used for 2 months. So expenditure will be 2,000 rupees. Remaining 10,000 will be carried forwarded next year as a prepaid expenditure. What expenditure? Prepaid expenditure. Have we not prepaid it? Every time we buy an insurance, it is prepaid, correct or no? Even the next 1 year again. Are you not paying expenses in advance? How do you pay rent? After using the property. But how do you pay insurance? Before even using that. Understanding or no? Yeah, even your school fees, college fees, everything is prepaid only. First pay, then entry. Even our academy also, first make the payment, then come inside the class. Correct or no? Yeah, everywhere it is common. So these are all prepaid expenditure. You are paying, but you are not incurring the expenditure. Every day you come and sit in the class, the expenditure getting incurred. So like that, if 12 months is the insurance period, how much is incurred in the current year? February, March. So 12,000 divided by 12 months is 1,000 per month. So how many months we have already used in the current year? 2 months. So that will be 2,000 rupees we have used. Remaining 10,000 will go as next year asset side, which is called as prepaid expenses. It is an asset. Why it is an asset, sir? Resource controlled by entity from which future economic benefit inflow is expected. So what is the future economic benefit inflow is expected? Next year, fire happened. Insurance will pay. Understanding? Sir, next year cash was stolen. Insurance will pay. Sir, next year accident happened. Insurance will pay. Clear? Understanding? Sir, then why this 2 months it is expenses? Sir, nothing happened. Waste expenditure. That is what I am coming now. Now in these 2 months nothing happened. February, March. Then it will become my expenses. Correct or no? Economic benefit outflow. without any inflow. So it will become my expenditure. Yeah, yeah. It is in 99% case, in case of insurance, it is expenditure only, sir. Correct or no? Where we will claim? Not every business will claim. Clear? So that is your prepaid expenditure. Now, examples: prepaid rent, prepaid salary, prepaid insurance. Sometimes what happens, an employee comes and asks, sir, 6 months salary you pay me in advance. I have a marriage of my sister. Correct? Now, what he is asking? Is he asking loan? No. He is asking his salary to be paid in advance. He is not asking any loan from you. He is telling, sir, anyhow you will pay salary to me every month. No, that you pay in advance to me, because I have an event for which I need money. Now, okay, done, I paid. Now understand, whether this entire 6 months salary is an expenses of today only. Is it incurred today only? No. As and when every month he gives me services, that expenditure gets incurred. Correct or no? So if I have paid 6 months salary as 60,000 rupees, that means what? Every month his salary is 10, 10, 10, 10. So every month I have to book expenditure of only 10,000. So I cannot book entire 60,000 as salary. So every month from that 60,000, I will reduce 10,000 and transfer it to P&L as my expenditure. Yeah, everybody understanding, no? So 60,000 is my prepaid expenditure. This month he gave me service, 10,000 transferred to P&L. Why? Now it is an expenditure. He has already given service, no? I have to pay him salary, no? But I have already paid in advance, prepaid. So I will transfer. Next, again, next month another 10,000 transfer. So like that, by 6 months, your prepaid expense will be over. From 7th month, you will start actually paying him again. That time it will not become prepaid. That will become normal. Correct or no? Because you will pay him salary only when he completes the entire month services. Yes or no? Everybody is following? Yes. Now, there is a concept called as deferred revenue expenditure. Now, don't confuse this with prepaid expenses. Even though this has not been asked in your exam, but I want to give you the clarity so that you understand. Prepaid expenses and deferred revenue expenditure looks, when I explain it to you, you feel it is same. Why we are differentiating it? Simple reason. I will tell you example of deferred revenue expenditure. When you try to set up your own private limited company, correct? Say for example, you want to register a company. Now to register a company, you need money initially. Who is having that money? You are having money. But company is getting registered from whose money? Is company using its own money to get registered? No. Why? Because company is not there only. It is not in existence only. Correct or no? Innu badike illa, hutte illa company. Adradu bank account illa, adakku PAN number illa, adakku enu illa. Correct. So what you will do? You are called as promoter. What? Promoter. So you will use your own money to set up a new company, to register a new company. Correct. So when you put in your money and set up a new company, whatever money you have put in to set up the company has to repay you. Correct or no? So the company will repay you after the company is incorporated. Right. So now today the company is incorporated. Suppose you have spent 50,000 rupees to set up a company 2 weeks back. Now the company is incorporated. Correct. So 50,000 incorporation done. Now in company's balance sheet, it will show 50,000 payable to the promoter. Correct or no? Why? Because he has paid the money. Now my question to you, should I charge this 50,000 as expense in this year only now? Are we running the company only for this year? We'll close the company this year. Opened, closed, done. So the entire 50,000 is an expenditure. Minimum, anybody who opens a company will run it for 3 to 5 years. Correct? Correct or no? 3 to 5 years minimum before it gets closed down. So what your deferred revenue expenditure says is, see boss, I know 50,000 you have spent, but the amount which you have spent now, 50,000, the benefit is not derived only in 1 year. The benefit is derived over the years, say 3 years, 5 years, like that. So what your Companies Act says is, preliminary expenditure has to be carried over for 5 years. That means every year you have to write off some expenditure. So if you have spent 50,000 for 5 years, it will be 10,000, 10,000, 10,000, 10,000. But is it prepaid? No. Understand the difference why it is not prepaid, because you have already paid and taken the services also. But in insurance, you have paid, but you have not availed the services. Understanding? In insurance, you have not yet availed the services. You have just paid for the services. That is why it is called as prepaid. But here, I have paid and already availed the services. Company is already incorporated. But here it is called as deferred revenue, because you will derive the benefit of this expenditure in 5 years. Understanding? Prepaid alla idu, but benefit of this expenditure will be derived over 5 years. That is why it is called as deferred revenue expenditure. Prepaid alli, it is not that benefit will be derived in next few years. No. Prepaid is something which we have paid in advance. Prepaid, the word is advance. We are paying in advance. Understanding, everybody? Deferred revenue expenditure is not that we are paying in advance, already paid. Service also availed. But the benefit which we are going to derive is going to be derived in more than 1 year. Understanding? For example, we issued debentures. What? Debentures. Debentures is a security. We issue the debentures to the public. We collect the money from public. So every debenture will have its own value. So when we give that debenture to the public, public will take that debenture and give you the money. Suppose we issued the debenture for a discount. For discount. Now, my question to you. Suppose on each debenture, I am giving you a discount of 10 rupees. So the value of debenture is 100, but I am taking only 90 rupees from you. 10 rupees I am giving discount. Now my question to you. Debenture is issued for 3 years. How many years? 3 years. Now the discount is how much, appa? 10. Discount is already allowed? Allowed. Already allowed. Now my question to you, whether will you utilize the entire 90 rupees only for this year, or you are going to utilize it for next 3 years? Correct or no? But discount is already allowed. Money is already taken. Transaction is already over. But this 10 rupees benefit, whatever we have, it is not derived in only 1 year. This money I am going to use it for 3 years and I am going to take the benefit of it. Correct or no? So that is why what we do, we call such expenditure as deferred expenditure, where the benefit the benefit from that expenditure will be derived over the years. Prepaid expense yake sir, difference ಏನು? Prepaid expenses is something where we pay in advance. Example, insurance. Sorry. Example, insurance. Now salary. We paid salary in advance, 6 months. Correct or no? Have we taken the service there? Not yet. We have only made the payment. But in case of deferred revenue expenditure, we have already taken the service. The moment I give discount to the debenture holder, I am taking the entire money now only, 90 rupees. Correct or no? Service is already taken. Discount is already given. But this service benefit I am going to take for next 3 years. That is why deferred revenue expenditure. You understood the exact difference between deferred and prepaid? I hope it is clear. Guys, sure? So your examples, see, this example is wrong. This concept is gone. Don't worry about it. Earlier, people used to treat advertisement expenditure as deferred revenue expenditure. Say, for example, I paid 10 crore rupees to Shah Rukh Khan to promote my brand for next 3 years. Shah Rukh Khan will promote my brand for next 3 years. People used to say, we will keep this as deferred revenue expenditure. Clear? But accounting standard said no. Why? What is the guarantee that you will get benefit? In case of advertisement, there is no guarantee that you will get benefit. I gave you example. There are many brands which give advertisement, still there is no revenue, which goes into losses. Correct or no? So any advertisement expenditure incurred should be recorded as a expenses in that particular year only. Usually what happens, I will tell you what this is trying to tell. Say I paid Shah Rukh Khan 1 crore rupees to promote my product. So in this month he promoted my product. Done. Only 1 month. But I paid 1 crore. No. So what I did, this 1 crore I said, I am going to derive this benefit for the next 3 years. So I will say 1 crore divided by 3. Every year I will charge to P&L only 33 lakhs, 33 lakhs, 33 lakhs. Not allowed. Why? Because our accounting standard says, boss, where is the guarantee that Shah Rukh Khan came, gave the ad, you will get, so sell the products. Vimal Pan Masala. Who is eating? Are we eating? But we are the one who is consuming that ad, correct or no? The people who are actually chewing Vimal will never see that ad. And people who are seeing those ads will never chew the Vimal. Correct or no? Am I right? Yes. So did it guarantee any expenditure, any revenue? No. That is why your advertisement expense should be immediately recorded as expenditure. Clear? Sir, let's say one example, sir. In the month of February, I tied up with BCCI. I tied up with BCCI. Now, I paid 1 crore rupees for promotion. When? March, April, May. IPL. Correct? March, April, May. IPL season. In between ad, my company name will come. Say I paid 1 crore rupees to BCCI. Now my question is, this 1 crore, will you put it as expenses in February and March itself, or you will divide it between March, April, May? It will be divided between March, April, May. Why? Simple rule, sir. Because these 2 months it is considered as prepaid. In advance I have made the payment. Now don't say that you just now told, no sir, deferred revenue expenditure. No. When I say, what I say is 1 crore I spent in the month of February. Forget about this. Entire 1 crore is spent in the month of February. Only February ads are running. But instead of charging this 1 crore to P&L, I said, no, I will keep it in balance sheet, because based upon this ad, people will keep buying my products for next 3 years. No. This is not allowed. Charge this entire 1 crore today only. Understanding? Understanding? Yes. But this example says, keep it as deferred revenue expenditure. Not allowed. So you forget about this example. Not a good example to remember. So 1 crore you paid for branding of product in the month of February. Done. Recognize this entire 1 crore in that particular year only. No, sir, but my products will get sold for next 3 to 5 years. Nothing doing. What is the guarantee that your products will get sold for next 3 to 5 years? So recognize that as an expenditure now only. Understanding? But in first case, my contract itself was for 3 months. So March to March ali, April to April ali, May to May. Understanding? Yes? Okay. Research and development expenses, cost of experiment, discount on issue of debentures, preliminary expenses. Preliminary expenses are called as incorporation expenses, is one of the example of preliminary expenditure. Clear? Everybody understood? Now one last topic we'll discuss, capital profit and revenue profit. Now, what is capital profit? What is revenue profit? Quickly, I will help you to understand. Listen to me. When you sell the goods, you make a profit. Correct? Because you purchase the goods for 10 rupees, you sold the goods for 12 rupees. Did you make the profit? 2 rupees. Like that you do every day. Correct or no? Next day 12 rupees, 14 rupees, 13 rupees, 16 rupees. Correct or no? This is called as revenue profit. Now, what is capital profit? I purchased a machinery for 1 lakh. I used it for 1.5 years. Now I am selling it. Understanding? Suppose, let's say I have used it for 2 years. Now 2 years I have charged depreciation of 10% each. So year 1, 1 lakh minus 10% will be 90,000. Year 2, 90,000 minus 10% will be 81,000. Now don't do 10% on 90,000. It is 10% of 1 lakh. Straight line method. Now what is the balance remaining? Correct? So here, here it will be 80,000 only. Straight line method. Correct or no? So 80,000. Now I am my fair price, that is the market price of this machinery now is 85,000. But what is the book price? If I sell this machinery, will I make the profit? How much? This is called as capital profit. Any profit made on sale or settlement of your assets or liability is called as capital profit. Understanding? Any sale, any profit made on sale of assets or settlement of your liabilities will be considered as capital profit. Understanding? Especially assets. Keep in mind of example of asset. If you make any profit on sale of assets, it will be considered as capital profit. Clear?
So how is the consent of
Sir, sometimes say for example, you have 1 crore loan to be outstanding. You need to pay. Now you didn't pay 1 crore. You paid only 60 lakhs and the account is closed. That 40 lakh is also kind of capital profit only, sir. Because that 1 crore is a capital. It is not sale or purchase. Correct or no? It is a loan. It is in the form of capital. Correct or no? So when that is getting settled, it is also in the form of capital only. Correct? So we can say like that. But for you to not get confused and remember properly, you can consider sale of any particular asset can be considered as capital profit. Clear? Revenue profit is simple, sir. Sale of goods, sale of services is your revenue profit. Clear? Yeah. Revenue profits are those profits which are earned in ordinary course of business. That is nothing but sale of goods or services. Capital profits are those profits which are earned from sale of fixed assets or in connection with raising of capital. Sir, raising of capital, loan. You said no, how it is capital profit? You understood now? Capital profits are not available for distribution as profits. That means any profits earned by the sale of fixed assets, this 5,000 is there, no? Owner cannot say, I will take this as my profit. No. Owner can take the profits which is actually genuinely generated from the ordinary business activities. What is your ordinary business activities? Sale of goods and sale of services. Revenue profits are available for distribution. Capital profit cannot be utilized for creating reserve funds. Revenue profit can be utilized for creating reserve funds. See, capital profit is usually used to buy asset again. See, when I am selling the machinery, what is my intention? I might be upgrading to the new machinery. Understanding? So any capital profits will be considered as capital reserve only. Those profits will not be available for distribution, or those profits cannot be transferred to general reserve. Sir, now what is general reserve? What is capital reserve? Don't worry. When the time comes, we will understand. But just now remember. Clear? Capital profit cannot be utilized for payment of dividend. Sir, these 2 points are interlinked. If your capital profits cannot be transferred to general reserve, you cannot distribute it as dividend. All these 3 points tells the same thing, sir. You cannot distribute it as profit. That is nothing but you cannot pay it as dividend. That is nothing but you cannot transfer it to reserve fund. All the 3 points are telling the same thing. If you cannot distribute it as a way of profit, then you cannot distribute it as a way of dividend. You cannot distribute by even adding it to reserve fund. Clear? So these are the example. A building purchased for 1.5 lakh, sold for 1.75 lakh. Clear? A company issues shares having face value of 100 at 125. I am issuing shares. The face value of the share, andre, the value on the share certificate is 100, but I am issuing it at 125. Am I not receiving extra? But is it my business? I will sell the shares, I will purchase the shares. No, it is my one-time activity. While collecting the money, I am collecting more. Understanding? So it is my capital profit. Clear? Yeah, okay. This question number 2, please take a screenshot of this. This is for your homework. One second. Okay, take first part. Take first part. First part you take. Then I will give the second part. Second part. 10 marks question, December 2022. 1 mark, 1 journal entry. If you write 1 journal entry correctly, 1 marks. Narration bardilla, half marks. Done. Okay, let's come back to our yesterday's chapter. So we practice now journal entries, correct or no? Now, for the same thing, we'll just try to prepare ledger accounts for the same examples which we tried to solve today, correct? Shall we? Huh? Yes. Now, let's take first example. Cash account debit to capital account to ICICI loan. We will open 3 accounts now. Shall we open cash account? Okay. Next, we'll open correct. What is the entry? Cash account debit. So we'll start on the debit side, correct or no? To how much? Correct? Everybody here? By capital is created, correct or no? So it will be 9 lakh. Sir, why 9 lakh, sir? Because you have contributed only 9 lakh, correct or no? Next, by clear? Understanding everybody? Sir, simple. ICICI account is credited, so we'll start on the credit side. Yes? Okay. Next, machinery account to creditors for machinery. Shall we open machinery account? Yes. Tell me the entry. Machinery account debit to creditors. So machinery is accounting getting debited. So we should start on the debit side. To how much? 4 lakh. Correct? Shall we open creditors account? Correct? No, creditors account was credited or debited? Credited. So we'll write on the credit side. By, in simple terms, ಇಲ್ಲಿ ಏನು ಬರ್ದಿರ್ತೀವಿ ಅದರ ಅಪೋಸಿಟ್ ಇಲ್ಲಿ ಬರುತ್ತಪ್ಪ. Clear? Now let's wind up the transaction. Enough. This is how ledger is recorded. Now we have to learn how to close the ledgers. Correct or no? Okay, let's come back to this. No P&L, no P&L item at all. We'll record on sales entry also. One sales, one purchase will record. Sales. Then we'll record one purchases. Okay, let's assume the triangle transaction cash sales of 4 lakh rupees. So what is the entry? Cash account debit to sales account by, correct? Let's assume a purchase of 3 lakhs. So what is the entry? Purchase account debit to cash account. To now this 2 will again come in cash account also. Now what is the entry? to sales 4 lakh by purchases 3 lakhs. Correct, Appa? Everybody is following? Now let's close this accounts. Yeah? How to close cash account, Appa? Total it. Cash is a what type of account? Asset account. Which balance it should always have? Correct or no? Total 14 lakhs. Here, how much is the balance? 3 lakhs. But it should be also 14 lakhs. So, what is happening? The remaining will go as by balance carried down. How much? 11 lakh. Yes. Next, ICICI loan. 1 lakh, 1 lakh. ICICI loan is what account? Liability account. Liability will always have a credit balance. So, the difference will go to balance carried down. So, this is our balancing figure. Now, machinery account. What account? Asset. Will always have a having a. So, our ledger is correct. By balance carried down. Correct. Next, creditors is what balance? So, is our ledger correct? Having credit balance. So, it will be to balance. This is how you should test whether you are recorded on the correct side or not. Next, capital account. Capital account should we have which balance? Credit balance. Correct or no? Liability, income and capital. Correct. So, to balance carried down 9 lakh. Correct? Yes. Next, sales account. Which balance? Credit balance. Is it having credit balance? Yes. Correct? Correct. What we should do, sir? To balance carried down. Wrong. To P&L. To trading and P&L. Correct or no? Why? Because I already told you income and expenses will not be carry forwarded. It will be transferred to P&L immediately. Clear? Purchases. By P&L should have a debit balance. Correct or no? Expense should have a debit balance. It is having. So the balancing figure will be transferred to P&L. Clear? All accounts closed? Yes? Correct or no? Yeah? Now, sir, why you made us close the accounts? One, you never closed the accounts till now. I hope you are clear how to accounts get closed, ledger accounts. Clear? Now, what is the next thing we want to know? The next thing we want to know is, after closing the account, what is the next step, sir? Recording, classifying, summarizing. That summarizing is called as what? Trial. Under trial balance, there are 3 methods. 1. Then both. Under trial balance, there are 3 methods: total balance method, balance method, and both. Mostly used, highly used. Clear? But we have to learn all. Now, how trial balance is prepared? Simple, sir. Listen to me carefully. What all accounts we have? First, let's write down the accounts we are having. Machinery account is there? Yes. Cash account is there? Yes. Capital? Yes. Sales? Purchases? Creditor? Yes. All these are the type. Ashtela? Only that much, right? Furniture illa. Now entry pass madilla. Okay? Now, let's see different methods. These are the ledger accounts. Correct? Now, correct. Loan account. ICICI loan. Correct? Now, let's see total method. What method? So, what is this method, sir? Simple, sir. Debit debit and credit. Sir, under total method, what it wants to do is write the totals of debit and credit. Now you will say, sir, both will be same, no sir? No, no sir. Without a balancing figure, what was the total? You write down that. Understanding? So, in case of our machinery, without this figure, what is the total? Debit side 4 lakh, credit side 0. 4 lakh 0. Cash account, leave this 11 lakh. What is the account? Debit side 14 lakh, credit side 3 lakhs. Correct or no? If we don't give this balancing figure, then it is 14 lakhs and only 3 lakhs. Correct or no? Next. What is the next one, Appa? Capital. Yes, sir. Come to capital. Leave this, sir. What is there? Credit side 9 lakh, debit side 0. Correct? Let's go to sales. Leave this. What is the figure? Credit side 4 lakh, debit side 0. Let's go to purchases. Leave this balancing figure. What is that? Debit side 3 lakh, credit side nothing. Correct or no? Next, creditors. Leave this. What is there? Credit side here 0. Let's go to ICICI. Leave this. What is there? Clear? This is called as total method. What is the debit total and credit total? Matching a check. 4, 4, 8, 10, 18, 18 plus 21. 18, 21. Matching a? Yes. This is total method. In total method, what is the total of debit? What is the total of credit? You have to write down. That's it. Done and dusted. Clear? Now let's see what is balance method. Let's see what is balance method. Here only one balance. The simple difference here and there is simple. Go to machinery account. Let's go to machinery account. What is the balancing figure coming? 4 lakh. Correct? So, which side was actually higher? Correct or no? Which side was higher? Debit side. Write down that. Clear? Understanding everybody? Now, next one is at cash. Cash should always have which balance? Debit balance. Correct? So, what is the balancing figure? 11 lakh. So, that will be written on your debit side. Both method balance. Machinery is which account? Asset account. Asset account will have what balance? Correct? So, one thing is sure, you have to write the amount on the debit side. What is the amount you have to write down? Balancing figure. Balance method, the name itself says balance method. Balance method means what is the balancing figure? You have to write down that figure. But you have to write down that figure depending upon asset, income, expense, this thing. Because see, machinery, where the balancing figure is written? On the credit side, but you don't have to write on the credit side. Because the machinery account will always have debit balance. In other words, in simple terms, opposite side. The balancing figure in trial balance should be written opposite side. Just for you to remember. Next, cash. What is the balancing figure? 11 lakh. Cash account should always have a debit balance. So, it will be written on the debit side. 11 lakhs. Next, capital. Capital should always have a, correct? How much is the balance? 9 lakhs. Should be written on the, see here. Now, capital, where we have written balancing figure? But we'll record it on the simple rule, sir. How did we arrive at balancing figure? Because our credit balance is always higher than the debit balance. Correct or no? Yeah, next, sales account. Tell me. Sales account.
Credit balance is
Credit balance. Correct or no? So whatever differencing balancing figure will come, it will come on the credit side. How much? Same thing with the purchases, 3 lakhs. Same thing with creditors. Here again total 4, 7, 18. 18. Now if you look carefully, sir, ಇಲ್ಲಿ ಏನು difference ಕಾಣಿಸ್ಲಿಲ್ಲ ಅಷ್ಟು. Correct or no? There is no much difference. But here you can find the difference. Here we have written debit also, credit also, but here we are writing only the balance which should be higher. Debit balance should be higher, so the balancing figure is 11. Sir, illu ade ಆಗ್ತಿರೋದು. If you look carefully, here also the same thing is happening. Impact is same. Here also the impact is same. Here also debit side 11 lakh higher than credit side. Credit side is becoming 0. Here also same thing, no? 14 lakh is higher. 3 lakh is on credit side. So what is the impact? Debit side higher by 11 lakh. Clear? Everybody is understanding? Yeah? Sir, both method is nothing but both method. Ashte. Am I clear? So balance method is you will write down the balancing figure, but always remember wherever that balancing figure is there, on the opposite side you will write down in the trial balance. So if your balancing figure is sitting in the credit side, you will write down on the debit side. If your balancing figure is sitting on the debit side, you will write down on the credit side. Logic is simple, sir. Asset will always have a debit balance. So the balance should be always written on the debit side. But your balancing figure will always be on the credit side. Why? Asset account will always have a debit balance. That means what? Debit total will always be higher. So the balancing figure will come and sit on the credit side. But you will take the figure, balance figure you will take, but you will again put in on the debit side while preparing the trial balance. Understanding or no? See, machinery. Balance method. Balance method. If they are not given any method, follow balance method. If they have given you specifically follow total balance method, then you have to do debit credit total. If they have given nothing, do balance method. Clear? So machinery will always have a debit balance. Correct? That is why the balancing figure will come on the other side. But while writing in a trial balance, you record it on the debit side, the balancing figure. Clear? Understanding everyone? Yes? Okay. So that is your trial balance. Am I clear? So quickly sum up today what all we learned. Journal entries, ledgers, trial balance. How many methods under trial balance?
total balance.
Now, what is the difference between capital expenditure and revenue expenditure? Which is recurring? Capital is recurring. Capital expenditure is non-recurring. Revenue expenditure is recurring. Correct or no? Now, capital expenditure is usually for assets. Revenue expenditure is for day-to-day business expenditure. Correct? Next, what is the example of capital expenditure? Machinery purchases. Example of revenue expenditure: salary, rent, wages, bonus, electricity expenses, water expenses, whatever you take. Correct or no? Next, what else we discussed? What is the difference between deferred revenue and prepaid expenses? Prepaid expense is something which we have paid in advance. Deferred revenue is where already paid and service has been taken, but the benefit of that expenditure will be taken in upcoming period or upcoming years. That is why we will defer that expenditure. See, defer is a word which we use common. We use it very often. Defer it. Defer means delay it. So we are delaying that expenditure. Understanding? Deferred revenue expenditure is nothing but, I know it is a revenue expenditure, but we are delaying that expenditure in recognizing in our profit and loss account. Clear? Yes. What else today we discussed? That's it. All the concept. Trial balance also we discussed now. Tomorrow's class we will be continuing with what? Trial balance is prepared. So we may, if questions are given, we'll solve the questions of trial balance. Now next important part is understanding cash book rectification of entries. Don't worry, your rectification is very easy than what it is there for CA foundation. So it will be easier for you to do rectification because they don't go technical. But before I wind up today's class, I will quickly explain about cash book. Cash book can be 3 types. How many?
3 times.
One,
Single column cash book.
single, double, triple, or 2 column. Single, double, triple. Now listen to my sentence very carefully. Cash book can be ledger also, it can be subsidiary book also. Now what is subsidiary book? I have not explained, I will explain it tomorrow. But just remember this point. Cash book can be called as subsidiary book also, and it can be called as ledger also. Why? Tomorrow. But just understand now. Remember these 2 points. Clear? Now, cash book has single column. What is the meaning of this, sir? Particular one amount. Particular one amount. This is single cash book. Hold on, sir. Okay, sir. Now, what is double column cash book, sir?
Use another column.
Now, the word amount, changes. It will not be called as amount, it will be called as cash, and one will be called as bank. Chill, hold on. I am not yet completed. Huh? You guys are pressing so much. Wait, I am not yet completed. One column I am using it for bank, one column I am using it for cash on both the sides. On debit side also, on credit side also. This is called as double column cash book. Instead of bank, we can even use or instead of cash also you can use discount. That is what I am telling. So if there is no cash at all, then it will be bank and discount. If there is cash, then it will be cash and discount. It can be bank and discount. It can be cash and discount. It can be cash and bank. But at a time only 2. Either bank cash, bank discount, cash discount.
Sir, everyone for cash.
Huh? Huh?
Bank and discount for the cash.
Sir, cash book doesn't mean that you have to only do about physical cash, sir. Bank is also called as cash only. If you look at financial statement, cash and cash equivalents, bank balances, cash balance, your short-term fixed deposits, andre 1 month fixed deposits, they will all be called as cash. Cash andre don't stick to the point that it is रोकड़ा. नहीं है भाई, रोकड़ा छोड़ के सब कुछ है. बैंक बैलेंस भी कैश ही है. ठीक है. Now, so double column cash book के लिए cash, bank, cash, discount, bank, discount. Clear? Sir, discount. Huh? Anybody? No, there is nothing as such. Next, triple column cash book. Sir, what is the difference in triple column? Sir, what will be there in triple column? Correct or no? All 3 put together. Cash, bank, discount. Clear? So triple column cash book cash, bank and discount. All the 3 will come. Clear? Everybody is understanding? So how many types of cash book? 3. Single, double. Single can be bank or cash. Double can be cash, bank, discount, cash. Whatever. Then triple column, cash, bank, discount. Clear? Sir, discount kotte illa sir. Hangandre triple column yak martira? Just make it double column. Clear? Sir, bank e kottilla. Then make only cash account. One more point. Cash account is also treated as ledger as well as subsidiary book. So, cash account antanu karibodu. We can even call it as cash book. Clear? Cash account and cash book. Both are interchangeably used. Clear? Yes. So, that's it for today's class. Tomorrow's class will continue. I think tomorrow we'll be able, no, tomorrow, sorry, not tomorrow, next Monday. My class will be next Monday. So by that time, what is your duty? Solve the questions, revise the topics, then come prepared. Don't, next class, don't come and say journal entry, asset account. Sir, what is asset, sir? Don't ask like that. Come prepared. So by next class, by maybe Monday, we will be able to wind up the entire chapter and solve few questions and close. Clear? Yes, everybody? Okay. Thank you. Bye-bye.